2018 was really a tale of two halves for global M&A. M&A was at record levels in the first half of 2018. In fact, it was the strongest first half for global M&A since records began. The first 6 months saw $2.5 trillion worth of deals announced worldwide, reflecting the impact on business of continued cheap capital availability, strong competition among buyers for assets, and the requirement for traditional businesses to acquire technologies as a means of innovating. M&A volumes doubled in Europe in the first quarter of 2018, and in the US they were up 67%. But in spite of a bullish outlook at the midway mark, third quarter activity decreased more than 30% compared to the second quarter. In fact, the second half of 2018 saw the lowest level of global deal values since 2013. The mid-year slowdown was precipitated in part due to macro factors such as higher equity valuations, increased borrowing costs in the US-China trade wars, and uncertainty surrounding Brexit. Of course, these aren't new factors, and much of any slowdown is linked to market jitters or pessimism as boards and investment committees become more cautious. However, Irish M&A activity in 2018 was at its highest volume of deals in 5 years and up around 5% on 2017. So all in all, it was a good, strong year for Irish M&A in what was a pretty challenging economic environment. The Irish financial services sector recorded the highest level of deal value in 2018, representing 28% of all deal values. This was largely driven by the aircraft leasing sector, which included the $2.4 billion transaction involving Go-Shock Aviation and Sky Aviation Leasing, and the $1.9 billion transaction involving Oryx Aviation and Avalon. The food and food services sector also performed strongly and was responsible for 4 of the top 10 deals that accounted for almost a quarter of total deal value. That was due in part to the large acquisitions carried out by the likes of Kerry Group and Glombia, as well as Greencore's disposal of its North American division. The technology, media and telecoms industries, the so-called TMT sector, saw a clear increase in its share in overall Irish M&A volume year on year, accounting for around 18% of overall activity. And we expect this trend to continue and for tech deals to take an increasingly large portion of Irish M&A deal activity. It's clear that no industry is immune to innovation, so the lines between tech and other industries are ever more blurred. As the pace of technological innovation quickens, M&A can provide a good solution for accelerating access to new technologies and markets and fending off competitors from both inside and outside one's industry. I think there are a few notable factors that should be on people's radar. The first is the availability and cost of funding. Ireland's M&A growth in recent years has been in part attributable to increased access and choice with regard to sources of finance. There is currently a favourable environment from banks, specialist debt funds and the private equity community. However, I know there are some concerns out there about the levels of corporate debt. A recent report showed global debt has grown by over 12% since 2016 to hit $213 trillion last year, with the corporate sector accounting for more than a third of the rise. With US federal interest rates on the rise and the ECB possibly increasing rates in the next 12 months, it could have an impact on M&A, albeit it could also create some short-term acceleration if buyers perceive there could be an increased cost of capital around the corner. The second factor is around high valuations and demand. According to another report, valuation levels for worldwide announced acquisitions in the first half of 2018 were at the highest in over 30 years. As we know, there are now record levels of private equity and financial sponsor capital, or dry powder. Dry powder continued to climb through 2018, reaching $1.2 trillion as of December 2018, a new record. Market belief seems to be that to a certain extent, the high valuation multiples could be the undoing of the current period of strong deal activity. The reality is that more buyers are chasing fewer attractive assets, so that inevitably puts pressure on driving up valuations. The third factor is around uncertainty and Brexit. M&A markets require a level of stability and predictability to function effectively. If we don't get more stability, there are likely to be fewer deals in 2019. For example, market turbulence can make it difficult for buyers and sellers to come to an agreement on price when attempting to strike a deal. The uncertainty surrounding Brexit is very much seen on the whole in Ireland as potentially having a negative impact on deal flows this year, although we are seeing some companies use it as a catalyst for defensive acquisitions to mitigate regulatory and supply chain risks. As ever, the ebb and flow of business confidence remains a major ingredient in M&A activity levels. Market confidence has remained resilient in Ireland in recent years, but we need to be cautious about not talking ourselves into a slowdown. The positive news is that, from what we can see, a lot of companies are becoming more immune over time to global uncertainty and volatility. Thankfully, good businesses will always be on the lookout for new opportunities. companies still recognise that top-line growth is difficult to achieve organically, and they will likely be on the lookout for new targets. And there are still a number of key growth drivers for both global and Irish M&A activity across all sectors. Firstly, companies will continue to look to use excess capital and liquidity to grow via acquisition. While the Irish economy remains buoyant, many other economies are not performing as well. M&A remains a tried and tested route for expansion in a lower growth environment, so we can expect to see more international buyers focused on Irish businesses. Secondly, a remarkable number of Irish companies are still family-owned businesses. Some estimates indicate around as much as 75% are in fact family-owned. Succession is therefore a growing factor and driver for M&A activity in many countries, especially in the likes of Ireland, the UK and the US. An increasing number of baby boomers are looking for successors and expect to exit over the coming years. Thirdly, M&A activity should be healthy across most sectors due to the increased cyclical move towards consolidation. While innovation-heavy sectors such as tech and healthcare should see heightened activity due to the impact of market disruption, we are seeing many clients looking to consolidate their supply chain as a means of future-proofing their business.